Hey there, YouTube. Welcome back. I'm going to cover a couple things in the stock market charts, try to point out what's important to be looking at right now so that everyone can understand how to trade this market in the future. Now let's get right into these charts, see what we got going on. I'm going to start out here with the ES mini futures. It's the S&P futures basically. And I want to point out the longer term picture of this chart. I think it looks the same as the S&P 500, but I basically want to point out the futures so everyone can understand what the market's been doing. Here's the 2009 Great Recession lows, and you can see we have a trend line just walking up the entire bull market of the last 10 years or so. And this is a weekly chart. So as I zoom in, you can see lots of reactions here. The wicks, dipped below, but the body's held. And you can see reaction here, reaction right in here. And then we broke. And that broke back in 2018. So the bull market trend was broken in the S&P 500 in 2018, around October. And then 2019 was Fed-induced backtesting. So we broke, started to roll over, would have gone into a bear market right here, but then the Fed came out and pumped the market back up. So then you did a backtest here, and then another backtest right here, and then we broke again. And this was, this was pandemic related, but still a break. And then the Fed came out and pumped the market back up. So each time the market wants to break down, but the Fed is coming out and pumping the market back up. So the reality is that if we're going to run up here to this 3620, that's another back test of the broken trend line. We're almost there, and that's where major resistance is going to be at. So that could be the end of this rally here. And if I zoom in and just pay attention to the pattern that we've seen recently since 2018, you've got, you're down, you're up, you're down, you're up. It's a broadening wedge, basically. As you can see, we're making this broadening wedge. And that is a topping pattern where volatility picks up, you're moving up and down, oscillating between the resistance and support. It does not look anything like a bull market. This is a bull market where you're just grinding higher over time, making nice steady movement higher over time. When you start to get into volatility period over the last couple of years where the Fed's having to come out and save the market every time it sells off big, we're seeing a topping pattern. So I just want to point that out. The end of the rally could be all the way up here. Maybe they'll stop short and sell it down early. Everybody's looking at this level. So let's look at this Uvxy. I pointed this out in the video the other day. I took a trade on it today. Nice profitable trade, up 10% on it. But I sold it. And here's what I was looking at. If I go to the daily, you can see I created a new wedge, and we've got this wedge from the high back here in March in volatility, and we've been making this bullish falling wedge over time. We started to break. We actually broke out today. This is a breakout. And if I go to the hourly, you can see pretty impulsive breakout, nice green candle breaking out, but now we're coming in for a back test. So what I'm looking for is this looks like very similar to what happened back here. If I zoom back into here, you can see broadening wedge. We broke out, but then started to fade back down for a back test, broke out, moved a little higher, faded back down, and then you got the big, huge move. So if we're going to just move, kind of consolidate above this wedge, then I'd expect a big move. It doesn't have to be this big, but I expect some sort of a breakout move to follow. So this is where I start to build positions, and I look for that big follow-through move. And I'm, just continuing to, I'll continue to watch this. I did take the breakout, caught the initial big surge up all the way here, sold out, and now I'm looking to add back on a back test of this breakout trend line. Qs, tech here, still bullish. There's nothing bearish. I mean, you look at the daily chart, there's no reversal candles or anything. So still moving higher. This thing apparently wants to go a little higher, so we'll just continue to watch it. Same with the S&P 500, continues to move higher. IWM, now this one's starting to look a little tricky because here's the thing. We've had this support line here at 156.20 for a while. Looked like it was going to break today, but it moved back right up, and we're closing right at, it's going to close right at this level. So, it's possible that this wants to break higher and move a little bit higher. It's really 50-50 at this point, so I'm not quite sure. I just want to point that out. and it could go either way. Could break to the upside, could break to the downside. I think it's obviously dependent on the other indices, but this thing continues to look weak, but it's holding. It's consolidating and kind of holding in this area. I'd expect to see some follow through the downside. I just haven't seen it, so I'm starting to question this one a little bit. Here's bonds. Interesting, selling off. That's a pretty big move in bonds today. Pretty impulsive red candle. So we're seeing some more selling in bonds. Interest rates are rising then, and we'll have to watch what the effect is. Now, you can see the banks here. This is exactly what happened, what I said was going to happen. If there was going to be any rescue job in the market, it was going to be an XLF in the banks. And sure enough, there it is. You can see, a lot of the time it's just pretty obvious what they're going to do, but you can see banks were starting to break trend. So the banks needed to be saved. People came in and bought the banks, and it's closing at resistance. So if this holds and we sell off now, then that's a nice clean rejection. But we're closing at resistance, so it could easily recover, and this could be a false breakdown. So I think you need to see what happens tomorrow to understand whether there's going to be a breakdown or not. It's very possible that tomorrow there's a gap down in the markets and the financials, and they just completely reject. And so I don't know if that's going to happen, but it is possible. XLV, little recovery job here as well. So the two sectors that were weak, XLV and XLF, they're buying those today. That's essentially what's happening. Moving on, let's look at some of these tech stocks that ran right into resistance. Here's Adobe, stopped short a little bit. You can see here's your uptrend in Adobe, and they did a full back test, stopped a little short and starting to sell off. I was looking to short it, but I wanted it up near this trend line. It didn't quite get there. So, I'm not really interested in it here. If they want to pop it back up, I might look at that. Same with Netflix. Same thing. You can see here's the trend line, and I haven't moved these trend lines, but basically broke down, and yesterday just a ramp up, pretty much on no news, but ramp up right up to resistance, and then was rejected and sold off. So if it holds and continues to move lower, then that was a clean rejection, and Netflix is bearish. Here's XOM oil. Okay, so this is starting to break the net. It's broke the neckline. It's starting to break down. I could see us doing a back test. Watch for that back test right here up around 41. And if it fails there, then you should see that impulsive selling come in. If it doesn't come in, then maybe they're going to recover that, and that was just a false breakdown. There's a lot of false breakdowns in this market because this market is a buy the dip market. Everybody's buying any kind of dip and weakness. And they'll continue to do that until that doesn't work. So you want to watch for the false breakdowns, and they'll show themselves, if they're going to be. But watch for that. Expect that, I guess, is what I'm trying to say. And then if it doesn't happen and it sells off, you got the real deal. And I'm going to wrap up here with gold. There's not too much more going on in the market today, at least that I'm seeing. So we'll wrap up here with gold. Look what happened to gold bullion. We'll go to the hourly chart. This right here, this candle, you can see the really long wick. This is the Fed. When the Fed came out, they ripped gold higher all the way up to about 1976. And it was basically faded right there. So if I go to the 1 minute, you can see here's the rip higher right there, and then instantly faded. And we're closing lower, basically. So the close is what's important. And to understand, what this candle here means, at that moment, people were taking a breakout thinking what the Fed was saying was bullish on gold. And in the long term, I think obviously it is bullish on gold, but there's a huge dollar short position that I think is going to need to be unwound before the gold and the dollar can move, make their next move. So I think what's happening is, that was kind of the fake out, and now you're seeing, it was sold off, and you're continuing to see selling. So if you look at the daily here, yeah, it could be flagging, but this big move down here, to me, it looks like it's going to make another move down to this 1790. So, I see this wick right here, and it popped right up to resistance, held, and was rejected. So I think we're going to continue to work our way down till we hit the 1790, maybe undercut it slightly, wash out anybody, and then that will be the end of the, the sell-off in gold. And the dollar, here's the dollar, same thing, fell down to support. It held, closing, starting to move higher, or closing back within the range, I guess, kind of consolidating. I think the dollar still needs to work its way up to this 95. And that's really what I see. So I think gold continues to sell off a little bit. The dollar continues to strengthen. And you'll see, gold miners, Barrick Gold's down 2.7% today. Agnico Eagle down 1.5%. So gold is, continuing to sell off. The gold miners are continuing to sell off, even though the Fed, came out with long-term bullish information for the gold, because they're going to let inflation run higher. So interest rates aren't going up anytime soon. But I still think there's a big position that needs to be unwound. A lot of shorts in the dollar. A lot of people piled into gold. You got to kind of unwind that a little bit before you can continue the next move. And that's all I got today. There's nothing really exciting that happened today. So just wanted to give the read on what I'm seeing going on. And I'll catch you guys on the next one. Bye.